welcome to the deep dive. So we've been seeing these headlines, right? Hinting at faint signs of revival in Canada's housing market.
Yeah, that phrase has been floating around.
But what does that really mean when you get down to it? Is this some big national recovery starting, or is it, well, a lot more messy than that?
Well, that's exactly what we're digging into. We're looking at a recent RBC report from Robert Hogue, their assistant chief economist.
Okay.
And we've got some excerpts from an article discussing it, courtesy of Mandeep Toor Omax Real Estate Inc.
Yeah.
So the plan is to really unpack it.
Right. Cut through the headlines, see where these, quote, signs of revival are actually popping up, and maybe understand the different things pushing and pulling the markets across Canada.
Exactly. Let's jump in. So the big picture Hogue paints.
Yeah.
Yeah, it is definitely framed as just faint signs of revival.
Faint. Not exactly a roaring comeback, then.
No, not at all. I mean, the data from local real estate boards, it does suggest sales activity ticked upward a bit in May, but specifically in cities where sales had, pulled back pretty hard before that.
Okay. So which cities are we talking about?
The report calls out Toronto, Ottawa, Calgary, Edmonton, Fraser Valley, Saskatoon, and Regina.
Quite a list. So in those places, maybe a partial bounce back from those earlier drops?
That seems to be the idea, a partial rebound. And the report mentions a couple of potential reasons, like the de-escalation of some trade tariffs since May might have eased some broader economic worries.
Right. I saw that Hogue quote, something about tariffs taking center stage.
Yeah, exactly. He said, the de-escalation of tariffs has taken center stage since May, alleviating some of the worst fears about the potential economic fallout.
Okay, so easing some general anxiety.
Even though, and this is the important bit, recent doubling of steel and aluminum tariffs increases risks in some communities.
So it's a bit contradictory. Less general fear, but specific industries or towns might feel a new pinch from those tariffs. How would that play out for housing?
Well, it's probably indirect for most buyers, right? But tariffs on things like steel and aluminum, they could potentially nudge up construction costs eventually, or maybe more immediately impact the local economy in places, heavily into manufacturing or reliant on those materials.
Got it. Adds another layer of local economic weirdness, even if the big picture fears subsided a bit.
Exactly. It's complex.
Yeah.
So the report basically says, look, we expect to get a clearer view in the coming months.
Right. Still very much watching this space.
Definitely.
And it becomes obvious pretty fast reading this that we're not talking about one single Canadian market story here. Things look really different depending on where you are.
Oh, absolutely. Huge variations. While some places saw that little sales uptick we mentioned, other major markets are still pretty soft. Like Southern Ontario and parts of BC. The report points them out as the least affordable areas, and Hogue calls them especially soft. Activity there is apparently near cyclical lows.
Okay, cyclical lows, just so you listening understand, that generally means activities bumping along the bottom, kind of the lowest point you'd expect in a typical market downturn.
Precisely. Not just slow, but really scraping the bottom for recent cycles.
Wow.
And because affordability is just so stretched and activity is so low, these are also the markets where prices are under the most pressure, downwards pressure.
Makes sense. More sellers than buyers, prices tend to fall.
Right. And the MLS Home Price Index, the HPI, it actually fell again in May compared to April in some key spots. We're talking the Toronto region, Hamilton, Kitchener-Waterloo, Cambridge, and out west, Vancouver and the Fraser Valley, too.
So the most expensive places are generally the softest and still seeing prices dip month over month in May. Where are things looking sturdier?
Well, the report contrasts this with other regions. It mentions the Prairie markets, Edmonton, Saskatoon, Regina specifically.
Okay.
Also parts of Quebec, like Quebec City and the Atlantic region, mentioning St. John's. These areas seem relatively sturdier.
Interesting split. Prairies, parts of Quebec, Atlantic Canada, holding up better than Southern Ontario and BC. Is that mainly down to affordability, you think, based on the report?
Affordability looks like a huge piece of it, yeah.
Yeah.
Especially for Ontario and BC. Prices ran up so incredibly high, so fast.
Right.
Just priced so many people out. So when things cooled, the pullback was maybe sharper. Markets that didn't have that same, crazy run-up. Many places in the Prairies or Atlantic Canada, they tend to be less volatile, maybe more resilient when things slow down nationally.
So past booms affect current busts, essentially.
Kind of, yeah. Though Hogue is careful to note that even these sturdier markets aren't, quote, entirely unscathed from trade-induced anxiety. But overall, they seem to be weathering it better.
Okay, that context is helpful.
Yeah.
Let's dive into some specific cities then, because the report gives some interesting local details. How about Toronto? It's described as a hesitant uptick. Why hesitant?
Well, hesitant seems right because, resales were up 8.4% in May from April. That's the second month in a row they've gone up.
Okay, sounds positive.
But the actual volume of sales is still way, way below where it was before the pandemic really hit its stride. So there's an uptick. Maybe sentiment is shifting a little.
But it's not exactly roaring back.
Not at all. And buyers still seem to hold a lot of the cards there.
How so?
Inventory. The report highlights inventory in Toronto is apparently the highest it's been in decades.
Decades? Wow.
Yeah. So when you have that many listings piling up, buyers can be picky. They have negotiating power. It puts pressure on prices.
Right. And the prices reflect that.
They do. The MLS HPI in Toronto was down 4.5% compared to May last year. It did tick up just a tiny bit from April to May, but the year-over-year trend is still down.
So Toronto, sales up slightly, but from a low base, huge inventory, prices still under pressure year over year. Got it. Let's contrast that with Montreal. The report calls it resilience amid uncertainty. Sounds different.
Very different story in Montreal, yeah. Resale activity barely dipped just 2% between April and May. And Hogue says, importantly, that activity there is staying at solid pre-pandemic levels.
Solid pre-pandemic levels? That sounds much healthier than Toronto's situation. What's keeping Montreal resilient?
It seems to be market balance. The report describes Montreal as reasonably balanced right now.
Yeah.
It's not leaning heavily towards buyers or sellers.
The Goldilocks zone.
Sort of, yeah. And that balance helps keep upward pressure on prices, unlike Toronto. In May, single-family home prices were actually up 8.6% year over year.
8.6%. That's significant.
It is. Condos were up too, 4.3%.
Yeah.
Now, the report does think this pace might slow down a bit as more sellers maybe decide to list their homes.
Sure.
But for now, Montreal is showing real stability compared to some other big cities.
Fascinating contrast. Okay, let's head west. Vancouver. The description here is much gloomier. Slowdown persists.
Yeah. Vancouver hasn't really seen those faint signs of revival in sales like Toronto or Calgary did in May. Resales actually dropped again.
Again? How many months is that now?
That makes 6 straight months of decline for Vancouver resales.
6 months. Okay, that's definitely a persistent trend.
It really is.
Mhm.
And adding to the pressure, inventory there has swelled up to a 12-year high.
12 years. Why so much inventory?
The report specifically mentions a surge in unsold condo completions hitting the market. So, new supply adding to existing listings.
Right, more homes for sale, fewer people buying. I know where this leads.
Exactly. Prices are falling. Vancouver's MLS HPI was down 2.9% in May compared to a year ago. And the report suggests that downward momentum is likely to stick around in the near future.
So, a pretty tough market in Vancouver right now. Headwinds, as they say.
Definitely facing strong headwinds.
Okay, very different from Montreal and even different pressures than Toronto. Let's look at Calgary now. This one sounds like the outlier. Defying the trend, strong resilience. What's Calgary's secret sauce?
Calgary really stands out in this report, yeah. Especially given the softness we're seeing elsewhere. May resale activity there jumped over 8%.
Wow, after falling for a few months.
Yeah, it bounced back strongly after 3 months of declines. And the key drivers mentioned are pretty fundamental. A really fast-growing population and incredibly strong job growth.
How strong?
The report says job growth there is 3 times the national average.
3 times. Okay, that will drive housing demand, won't it?
Absolutely. I mean, that kind of influx of people needing places to live, both buying and renting, creates steady demand.
Right.
Now, interestingly, Calgary's HPI did dip slightly year over year in May, down 2.5%. But the report suggests new construction has actually helped keep prices from maybe exploding without scaring buyers away.
So new supply is meeting some of that massive demand.
It seems like it. The demand from population and job growth appears strong enough to absorb both the resale listings and the new homes coming online. It's a very different dynamic.
Okay, so let's try and connect these dots. We've got Toronto with a hesitant rise, lots of inventory, price pressure. Montreal looking balanced, prices still rising. Vancouver stuck in a slowdown, falling prices. And Calgary booming, basically, fueled by jobs and people.
Yeah.
What does this patchwork quilt tell you about the Canadian market overall right now?
Well, it really tells you that talking about the Canadian housing market is one thing is probably not very helpful right now. It's incredibly localized.
Right.
You've you've got these dynamics driven by completely different things in different places, like how much prices ran up before is impacting affordability now. Current inventory levels are huge in some cities, not others. Regional economies like Calgary's job boom are playing a massive role. And then you have those, potential trade impacts lingering in the background too.
So those faint signs of revival the report mentions, they're really not everywhere. And even where they're showing up, like Toronto or Calgary's May sales jump, the reasons and the overall market health look totally different.
Exactly. It's definitely not a case of a rising tide lifting all boats. It's more like, different boats in completely different weather systems.
That's a good way to put it. The contrast is just so stark.
It really is. And it makes you wonder, how can you have a sustained national trend when the major regional engines are behaving so differently?
Yeah, how does a national recovery actually happen if, say, Vancouver is still declining after 6 months while Calgary is taking off? It's a puzzle.
So wrapping up this deep dive, it's pretty clear Canada's housing market picture is, anything but simple right now. Yes, the RBC report talks about those faint signs of revival, maybe some sales activity ticking up here and there.
But it's patchy.
Very patchy. And the underlying conditions, the price pressures, they just vary so much region by region. You've got affordability constraints biting hard in some places, inventory piling up, population booming elsewhere, even those trade dynamics possibly playing a subtle role.
What really jumps out is just how intensely local it all feels at the moment. These aren't broad national waves, they're very specific local currents.
Absolutely. And if you connect that to the bigger picture, it leaves you with a really interesting question to think about. How can these fundamentally different conditions persisting across major cities and regions? How will that ultimately shape the path of any national housing recovery in the months ahead?
Right, especially as we wait for that clearer view the report anticipates. Can you even have a true national recovery if key markets like Vancouver and Southern Ontario are still struggling so much, while others seem almost disconnected from that trend?
Exactly. Something to definitely keep in mind as you watch the housing reports roll in over the next while.